Alright guys, welcome back to my YouTube channel. Welcome back to another chart breakdown video. And today we'll be looking at the USD JPY pair, US dollar versus Japanese yen. So we're currently on the 4 hour time frame, and on the 4 hour time frame, as you can see, I'm seeing here that the price is giving us a bearish movement, meaning that the price wants to push to the downside, but there are still some confirmations that are needed before you can actually enter this trade, right? So currently price is showing us that it wants to go bearish. However, I'm seeing here that the price has been respecting this zone, which has been a demand zone for buyers. So if I should go on a smaller time frame, let's say on the 1 hour time frame, you can see that price has been respecting this zone, right? So once the price gets to this zone, buyers pushes the price up, right? So the same thing happened here and the same thing happened here. And then the price came back to this zone again, and then the buyers pushes back price up. So currently we still haven't have a strong candle that closes below this zone, and that's what you wait for before you actually enter this trade, right? So it's just about being patient and waiting on your setup, right? So if I should go on a higher time frame, let's view the weekly time frame and see what it's showing us. So on the weekly time frame, I did mark out my zones. So on the weekly time frame, currently price it's not doing much. This was the price action for last week. As you can see, we had a balanced candle, meaning that in this price action there was a lot of consolidation. So if I should go down to the daily, you won't see like a trend, right? You won't see like if the market is trending up or down because the price has just been choppy based off that weekly candle. You can see it's a balanced candle. It doesn't close bullish strong, and then you have a long wick below it as well, right? So price was just consolidating between this level. So price was just consolidating between here and here, right? However, for this week we're seeing a bearish candle, which it's kind of giving us a signal that price might want to go down. But if we should look at the overall structure of the market, the overall structure, it is actually bullish, right? So as you can see, the overall structure on the weekly time frame, it is bullish. So if I should get my trend line and draw it from there, so that tells you that we are having a bullish price action on the weekly time frame, right? So once the higher time frame is showing us a bullish, what might happen with this? It might gives you a pullback, right? And then continue to push to the upside, right? But all the confirmations still have to come from the lower time frame to tell you if the market wants to pull back. So let's go back down now to our daily time frame, right? So on the daily time frame, as you can see, it's now giving us a bearish signal as well. On the daily, it's now showing us a bearish signal, right? So that means that price could push lower before it actually pushes to the upside, right? So if I should go on the 4 hour time frame, now on the 4 hour time frame, as you can see, the price it is still bearish, right? So we have this strong bearish candle right here, right? This was a bearish candle. This was the price action on Friday, and then this was the candle that uh yeah, this was a Friday candle as well, and then this was the candle that opened the market on the 4 hour time frame, and it closes bearish as well, right? So let's go down to now our 2 hour time frame. All right, so on the 2 hour time frame, as you can see, the price action is still showing bearish, but we're still waiting for some extra confirmation, right? Why? Because you want to ensure that when you enter the trade, you get a better risk to reward, and it's a high probability trade, meaning that it works out in your favor, right? So as you can see, we have this strong bearish candle, price then pushes back up, right? And then we now have another bearish candle, right? And then this is the current price action, right? So let's go take a closer look. Let's go down to a smaller time frame. Alright, so on the smaller time frame, as you can see on the 1 hour, this here looks like a double top that was created. So we had this rejection zone that price failed to break through and it pushes back down, and then this is the current price action, which is rejecting the zone. So let's now look at our 30 minutes time frame to see what it's showing us. Alright, so on the 30 minutes time frame, as you can see, the market created a double top, right? So we're seeing a double top pattern that was created, right? So that would have been your double top. So let me just put this in a different color. Alright, so that would have been your circle. That's one rejection zone, and then this is the second rejection zone right here, right? So this is where price creates a double top, and then we have our neckline that I draw right here, right? So this would have been a neckline. Let me just remove this. Alright, so we don't want to have any unnecessary lines on our charts. So this right here would have been your neckline. Let's remove this one as well. So normally, once the market creates a double top and price broke through the neckline, it's best to always wait for the price to retest the neckline and see what it does. If price rejects that neckline and if it's a double bottom, if it closed bullish after the rejection, you can look for a buy. But if it's a double top and it's closed bearish after the rejection, then you can look for a sell. So if it do something like this, comes back up and then closes bearish, then you can look for a sell because that tells you that price doesn't want to go up and it wants to continue to push to the downside, right? So now let's look at our 15-minute time frame. All right, so on the 15-minute time frame, as you can see, price slows down, right? Price slows down and it seems though price wants to push to the downside. However, again, it's best to wait for the candle to close below this level. So once we have a strong candle close below, anywhere below this zone, right? Once you have a strong candle close below here, you can then look for the sell entry just to get a high probability trade, right? And 50 minutes is the lowest I normally go to when doing the top-down analysis, but I sometimes enter on the 5-minute chart just so I could get a faster entry and have a lower risks to reward, right? But let's look at the 5 minutes and see what it's doing. All right, so on the 5 minutes, as you can see, price rejects the neckline, right? So price rejects the neckline, and it now seems price wants to push to the downside, right? However, still no strong confirmation as yet because we are not really in a session right now, so the market is not really volatile, right? But it's a good setup so far, right? And once you know to read the price action, then that's the best thing, right? So yeah, that's it for the top-down analysis on the USDJPY pair. Hopefully you've learned something, and remember to leave a like, comment, and share, and also subscribe to the channel for more videos. And thanks for watching. Peace out.